by now, we all know that there's a secret buyer in the market. I have an estimate that, based on my numbers and all my digging, that the People's Bank of China has 5,300 tons. And that was confirming that, the Chinese people were buying twice as much gold as everybody thought. Now, that was very controversial in the beginning, and now it's just common knowledge. At a certain moment, the countries outside the Eurozone, but inside the EU, are starting to buy gold to equalize their gold reserves to the Eurozone average. So, for example, the Dutch central bank started saying on their website that gold is the ultimate store of value. And if the whole fiat-based monetary system would collapse, then countries could use gold to build a new monetary system.
Welcome to the Microscopic Podcast presented by Gold Republic. My name is Alexei Joranov, and in this format I invite you to look at the world through different lenses, to see what's hidden in plain sight. My guest today is Nieuwenhuijs, one of the most respected investigative analysts in the precious metal space. He is the founder of the Gold Observer and a leading analyst for money metals. Jan is not your typical financial commentator. He is a data forensic expert who specializes in tracking the hidden mechanics of the global monetary system. He monitors what central banks do, not just what they say, digging through obscure balance sheets, trade customs data, and accounting footnotes to reveal the silent accumulation of gold by sovereign nations. He is best known for his thesis that Europe has been secretly preparing for a new gold standard since the 1970s, and estimates of the People's Bank of China true gold reserve amounting over 3,000 tons of gold, more than double of their official figures of 2,000 tons. So today I have the pleasure of welcoming you on the podcast and talking about all those topics. Jan, it's a pleasure to welcome you on the Microscopic Podcast.
Thanks for having me. It's very nice to be with you and to talk about gold today.
So the first question I ask for the first time appearant guest on this podcast is the following, and I think it's quite an obvious one for you. But what is your most heretical thought about the monetary system today?
My viewpoint on the monetary system and gold's role in the international monetary system is not contrarian at all anymore. I started writing about gold being redistributed globally and the equalization of gold among central banks. Many years ago, I started writing about the People's Bank of China accumulating much more gold. I had proof for that in 2023. Then I found the smoking gun in 2024. According to my estimates, they have about, let's say, 5,000, as we speak, 5,500 tons right now. I started my career with SGE withdrawals. So that was about how much gold was withdrawn from the vaults of the Shanghai Gold Exchange. And that's all common knowledge by now. According to my, what I read in the newspaper, even the Financial Times has now written about that the PBoC is acquiring gold covertly. So it's not that contrarian anymore.
Well, that was exactly what I thought. So you've actually also covered the flow from the physical flow of gold from London vaults to the east for actually many years, as you just mentioned. What do you think motivated this flow?
People at the People's Bank of China, so officials from the People's Bank of China, realized in the 1980s that their economy, their communist economy, and only, gold was forbidden, gold and silver was forbidden to hold for the people or buy. They must have had some rings and golden tooth, but it was forbidden. But they realized that, that model was unsustainable, and if they should internationalize or liberalize and open up, gold would be a part of the mix, because they were also looking at the West, what they did, and the West was still holding gold and still held a lot of gold relative to their international reserves. And also in the West, a lot of people were holding gold privately. to be protected against external shocks and what have you in a debt-based monetary system. So very slowly in the 1980s, it was easier for Chinese people to buy gold. And then in 2002, the Shanghai Gold Exchange was launched, and the gold market in China was fully liberalized, and people could, the price was set through the Shanghai Gold Exchange, not by the People's Bank of China. The Shanghai Gold Exchange, the SGE, is, by the way, a subsidiary of the People's Bank of China. But slowly, they liberalized the market, and then they started encouraging the people to buy gold. And it wasn't that difficult because the Chinese have been infatuated with gold actually for many centuries. Um, it's funny that China had a lot of monetary standards. So they had, copper was money in China, paper was money, silver was money, jade was money. But gold has never been money officially. It was always a store of value. And of course, if, 50 years of the Communist Party didn't break that. So when they could, the people started buying gold again. And especially after, let's say, when China became a major economy, when this economic boom happened, there was a lot of wealth being accumulated in China. And they started buying a lot of gold, especially the citizens, since 2010. The central bank as well, but and we're probably going to talk about this later, but the central bank in China really ramped up gold buying after the Ukraine war started in 2022 because they saw that the dollar was being weaponized and they had no time to lose. They were in a hurry to buy gold. So they started buying hundreds of tons a year, and they still do. And that's predominantly what has been driving up the price since the war in Ukraine. And so that is a bit about the history of why China is buying so much gold, and also the difference between the central bank and the citizens.
So let's now dig a bit more in detail, like in the ways you've uncovered that. So you've already mentioned a few elements to that, but could you maybe give us more insight about how exactly, in terms of analysis, you've been able to shed light on what's deemed a bit obfuscated, like a bit the secret way of the way China has been able to acquire silently those gold reserves along the years?
So let me tell you about that from connected to my personal timeline. What I found out in 2013 was that the Chinese people were buying a lot more gold than everybody thought in the West. Up until then, I think 99% of people or investors globally were looking at supply and demand numbers by the World Gold Council or GFMS, it was named at the time, and CPM Group. And you always had this balance. This is what being mined every year. This is scrap supply. And it had to match, the other side, which is demand. And they counted newly made jewelry, etc. And what I found, and they looked with this model to every country. And so they also look in China, how much jewelry is being fabricated, how many bars are sold at shops, etc. But that is, of course, the totally wrong way to look at gold, because what's being mined every year is only 1.5% of, adds 1.5% to what's above ground. Which is, at the time of writing, I guess 240,000 tons or something. Most of the trading and volume and activity in gold is in above ground gold, right? I mean, what's the difference between you buying a gold coin newly fabricated or buying a piece of metal stored in a vault in Switzerland that moves from, let's say, person X to you? So there's no point in measuring what's newly fabricated or sold in shops. You have to track the flows that just move between people or countries. So what I saw is that, and this started with the Shanghai Gold Exchange. They have a unique system in China that most private gold flows through the Shanghai Gold Exchange, and they published a number, I found out, on the Chinese website about how much gold is being withdrawn from the Shanghai Gold Exchange vaults. And if everything is being sold through the SGE, then what is being withdrawn from the vaults could be and still can be used as a proxy for wholesale demand in China. Now that was a lot higher. That was 2 times higher than what the World Gold Council or CPM Group or GFMS at the time were saying. And then I could find all the export numbers because at the time China didn't publish their import numbers on gold. So I was adding up exports from Hong Kong, Switzerland, Singapore, the US, the UK, whatever I could find. And that was confirming that, the Chinese people were buying twice as much gold as everybody thought. Now, that was very controversial in the beginning, and now it's just common knowledge. After a few years, so that's on the private gold side in China, and more or less the same happened with the central bank. I thought the central bank was buying a lot more because also for just logical reasons, and because they are, let's say, not a friend of the US, and we live in a dollar-centered world. And if you're not a friend of the dollar, then you might use an alternative to the dollar. So that made a lot of sense, and there was some evidence here and there that some officials were talking about gold in China also because they were encouraging their people to buy so much gold. Then why wouldn't they add a lot more gold than what they're saying maybe? And because they are such a big player in the market, of course, they couldn't, disclose everything they do, or they would, they would panic the market, and the gold price would skyrocket. And they, if they wanted to buy a lot of gold in the future, they would get less gold for their dollar, so they would keep it low. But in 2023, I spoke to a few people, and then what I came to realize after some researching was that the numbers by the World Gold Council, or what all central banks buy every quarter, is a lump sum number, and that is based not only on the IMF data, but also on field research by, for example, Metals Focus, which is the supplier of data to the World Gold Council. So I was seeing those World Gold Council estimates every quarter, and then I took the IMF numbers, and what did I see? It was a large discrepancy between what the IMF, what central banks officially report to the IMF to have bought, and what the World Gold Council was publishing in terms of all central banks buying per quarter, according to their field research. And I was told by some industry insiders that the discrepancy was mainly caused by the People's Bank of China. So that was, let's say, proof number one. Of course, I couldn't prove it was the People's Bank of China, but the difference was there. So somebody had to buy the gold. And then, of course, if you add all the things, gold started diverting from the tips yield. It was correlated to the tips yield, the gold price since 2006, and it started drifting higher instead of lower according to the tips yield. And everything else, and that became a theory of mine. And then I actually found, eventually in, I believe, 2024, the smoking gun, and that was that, even when the Shanghai Gold Exchange, the price there was trading at a discount to London, China was importing a lot of gold. Now, why would anybody buy gold abroad, then import it into China to sell at a loss? So that doesn't make sense. So I knew that the gold that was being imported didn't flow over the SGE towards the private sector, because the People's Bank of China doesn't buy gold on the SGE because gold there is quoted in renminbi. You can't sell dollars for gold on the Shanghai Gold Exchange. So I knew that was going to the People's Bank of China, and by then I had collected so much evidence that I started pounding the table about it, and that has now become common knowledge as well, because I saw the Financial Times has written about it, Time Magazine has quoted me on it, the Washington Post, Bloomberg, El País, a large Argentinian newspaper, I believe. I mean, by now we all know that there's a secret buyer in the market, and then I have an estimate that based on my numbers and all my digging, that the People's Bank of China has 5,300 tons. That is a bit difficult, right? Because now we know more or less how much they buy every quarter, and how much is being exported from the UK to China, and those are large bars, so probably goes to the People's Bank of China. But if I reverse engineer those numbers and go back to when my number starts, how much did the PBoC had at that point, which is in 2010, I believe, or 2015. So that is a bit. Then I have to rely on industry insiders again, what they thought. The People's Bank of China truly was holding in 2015, and then if I calculate that to the future, I come to the estimate I just mentioned, which is 5,000, which is 5,500 tons, more or less.
So let's admit that it's those 5,300 tons at least. If now, because you've used that for the European equalization part that we will talk about after this, if we take a look at it on a GDP or gold reserves to GDP ratio, China would be on the official numbers around maybe 1.5%, I think, and the USA around 2%. So if let's say we say it's twice higher than that, China would be around, I guess, 3%. How much more room would that be for China to feel comfortable with the amount of reserves they have, in your opinion?
Well, I think there certainly is more room for them in their mind to buy more. I don't know what their target will be, but I think they still, for their valuation, have too little gold compared to the West. Also because I think what their vision is on the international monetary system is a system in which, let's say, the East, but maybe the whole world, will trade more in local currencies. So, for example, in the East, you have this project called mBridge, which includes now several countries, but Thailand, Dubai is included, the UAE, Hong Kong, China, several others. They will trade in their local currencies or in the renminbi if that is the most liquid currency. Of course, those are non-dollar currencies. And then if any of those countries has a surplus, they could store that in gold instead of dollars or US treasuries to be protected, because gold doesn't have any counterparty risk. So there's no risk in holding gold, and your savings are safe. Of course, in this scheme, there would be several countries, or one country would be dominant because that's the largest country, and that is in the region. That is China, which is the largest GDP, and does the most trading with the other countries. So it could be that the renminbi is mainly used for trading in the East, and then any surplus renminbi is being exchanged in gold on the Shanghai International Gold Exchange, which would then be a liquid gold market. And so you could call it the gold recycle standard, in which there's a difference between trading in a currency and storing value in a currency. So they would trade in local currencies in renminbi, and any surpluses would be saved in gold. And the infrastructure would be mBridge for the trading part, for payments. And then the Shanghai International Gold Exchange would be the exchange on which the countries could buy gold.
So you've just mentioned mBridge, and also the fact that the surplus in trades of, let's say, US treasuries would be then converted into gold. But wouldn't that then collapse the demand of US treasuries on the long term, if that will, let's say, expand over a percentage in global trade?
Yes, it would definitely. And you already see that there is still demand for treasuries from abroad. But if you look at, for example, the percentage of foreigners or foreign central banks that is holding treasuries as a total of all treasuries, that is falling. So that kind of tells you a lot. And also, if you look at international reserves, and with international reserves I mean gold and foreign exchange reserves, you can make calculations on how much of those are in gold and dollars and euros, etc. And the part also, because the gold price is rising a lot, because of the people Chinese central bank is buying so much, gold share is rising dramatically, and the dollar share is falling. All because primarily now because the gold price is rising so fast.
Now the question is, where is the pricing going to be dominant? So far in the West, it's been the COMEX, the LBMA, and now listening to what you just shared, it seems like it's moving east. Is that already the case? And how do you see that?
Well, I have I think a different view on how the gold price is set than most people. I don't think that let's say the COMEX or London is that dominant. I think a lot of people think that the gold price is determined by an exchange or market in which there is a lot of volume in gold. But in my view, that's not the case. The gold price is set by market participants and supply and demand. But on the demand side, it's about physical. I mean, all those paper markets are connected to the physical market. So we only have to think about the physical stuff. Of course, but I can talk about this later. Price discovery, just from second to second, that happens on the COMEX. But the physical market determines, what the gold price does on a month-to-monthly basis. And that's determined by whoever buys and holds, right? I mean, the PBoC could have ramped up the price of gold many, many years ago if they wanted to, because they had, in 2010, 11, 12, they had like 4 trillion in foreign exchange reserves. They could have skyrocketed the gold price a lot sooner with how much dollars they had, but they didn't want to. They thought we have some time and we'll see what happens. We bet on a few horses and we'll see. But to come back to your point is that when you look at the East, what the pattern has always been up until 2022, for about 100 years, is that the price was always set in the West for, let's say, cultural reasons. So the culture in the West was they had a very advanced economy, and they, because of that, their banking systems were very developed, and there was a lot more credit in those economies. And so in the West, everybody was, playing with this credit and banks, and they didn't need gold so much. So whenever there was a panic, the West would buy gold with all the capital they had. The West was a lot more richer at the time. And then the gold price would go up. And while in the East, the tradition was that you save your money in gold. They didn't have advanced economies. They didn't have banks. They didn't have all those credit assets. So they were very aware about how to store their value or their savings in gold. And especially, they had a very long-term vision. So whenever the gold price would rise, they would sell, and the gold would be flowing from east to west. And whenever the West was feeling comfortable in their economies, there was no panic. The West would sell their gold, and the East would be happily backing up the truck, because they would thought, hey, gold is cheap now. It's at a discount. We buy the gold now, and in 10 years' time, there is another panic in the West, and we can sell it back to them for 5 times the amount of the current price. So that is what I called the ebb and flood of gold. That was actually that name was first conceived by Timothy Green, a famous gold author. You should read all his books if you didn't have already. And I found his. He first published it in a book in the 1980s, I believe. And then when I found that, it matched exactly what I was seeing in the gold market. So then I started writing about this theory as well. And it always worked for about 80 years. If the price was going up, gold was moving from east to west. Price was going down, the gold was moving from west to east. And the funny thing is that, for example, in 2013 and 14, when the gold price, fell off a cliff, what happened to the premium in China? It went up. So gold was going down, the West was selling, but demand in China was going up because they were happily buying all that gold on sale, right? So the theory makes perfect sense. But now it's a much more mixed picture. Everybody is, or let's say a lot of sectors and big investors in the market are are changing their minds, are confused, are switching. So a lot of things are now happening. Sometimes, even the Chinese citizens can now drive up the price. Because of maybe they're wanted to have it because they fear sanctions or whatever. They fear inflation. It can be a lot of things. Maybe they speculate. So now sometimes we see the SGE premium go up and the gold price rising at the same time. We also see ETF holdings in the West go up and gold rising at the same time. So it's a very mixed picture now. I look at all those elements in the market, ETF flows, premiums all over the globe, import and export numbers, and then you can figure this stuff out. But it used to be that the pattern I described, and that pattern is now changing, and it's more that the East is now driving the bus, and most prominently the People's Bank of China.
There was also another thing that I found interesting is that, for example, you mentioned the CPM group before, they've also argued that central banks are rather price sensitive and that they stop buying when gold rips higher and higher. But we've seen that actually this is not the case really, because gold has been topping all-time highs over and over. I think this year alone has been over, I forgot counting, I think over 20 times. And the purchasing of central banks has also been consistent since at least the last 2 years. We're approaching the almost 1,000 tons of purchased gold on a year-on-year basis. So is this time different?
Yeah, this time is different, I think. I mean, this is just such a historical moment in the gold market, just like in the 1960s when Bretton Woods broke, or now with the gold price rising very fast and central banks continue to buy. And it's like you say, central banks used to be really price sensitive. They were net sellers until 2008, then they became net buyers again, but they weren't buying a lot and they were only buying the dips. But that all changed because of the war and the weaponization of the dollar. That changed everything. And now, the PBoC is buying so much, which tells us they're very much in a hurry. And they also have a vision because they're buying gold. So, that's their future plan. And you also see the developments regarding mBridge or, bypassing the dollar in payments. So yeah, it's really, this time really is different, and it's just fascinating to watch, to be honest, to see the People's Bank of China, but not only that central bank, but also the central bank of Saudi Arabia, for example. I also published research about that central bank covertly buying gold. I haven't followed up actually, but it's not just the People's Bank of China. It's more central banks that are covertly buying gold. Of course, they don't want to upset the US too much. In the case of Saudi Arabia, or the big chief there, what's he called, MBS, was in Washington not so long ago, and he wants to stay friends with the US, but he also wants to be friends with China and think about the future. But there's a lot of changes going on now.
So you just not mentioned Saudi Arabia, and if I'm not mistaken, the Shanghai Gold Exchange has also set up, I think, the first node, a first vault that would serve as a way to exchange oil for gold, or oil for renminbi, then convert it to gold. Can you maybe talk more about this, and also if we can expect more vaults or nodes to be set up, and how this infrastructure that China envisions actually would look like tangibly?
Good question. What I think is that China wants to set up an international gold clearing system. So with the Shanghai Gold Exchange, and that international arm of the Shanghai Gold Exchange is the Shanghai International Gold Exchange. Now, what we saw in 2014 already was that they set up a vault in the Shanghai Free Trade Zone that was already, in terms of trade and how you can get gold in and out, and capital controls with the renminbi and everything, is already a bit of a foreign country within China. So that was the launch of the Shanghai International Gold Exchange. And now they have set up a vault in Hong Kong, after some other free trade zones in China, which is, a foreign country, but also it's a special region of China. So, they take it slowly. But I think in the next step, they will also set up gold vaults from the Shanghai International Gold Exchange in, for example, Saudi Arabia or Thailand or in Dubai. And because gold is, of course, a physical element. So if you want to exchange gold, buy gold, um, you have to send it, you have to transfer it by airplane, but most countries do not want to keep all their gold abroad. So it will be some of it will be abroad in, for example, the Shanghai Free Trade Zone, but they also want some on their own soil or in another country, and there needs to be a clearing system, and that can be conceived by the Chinese through this Shanghai International Gold Exchange with these vaults all over, let's say, Asia.
So that would mean that also then the yuan would require to be quite liquid to accustom or to accommodate rather global settlements. Some also argue that the settlements would not be on a brutto basis, but on a net basis. So the difference between the amounts that are being traded would be then settled in gold. How much more do we need to see the appreciation of gold to be able to actually meet that demand? Because obviously gold is fixed, there's a fixed supply of it, and you can't just print based on the demand like most currencies in the world do, the central banks do. So in terms of the price that is traded with gold, how much more does it need to be valued to be able to meet those demands, in your opinion?
Well, that's a very subjective matter, actually, because you can say, well, for example, the renminbi is not liquid enough, but if people take away your dollars, what is the most liquid currency? It's still the renminbi, right? So, to answer your question, I don't know, because they will do whatever they think is more of an opportunity than trading in dollars.
Now talking about the more like European perspective on that, I've mentioned at the beginning of our conversation that you've covered this and that you've also had this theory that there is an equalization strategy going on in Europe since the 1970s. First of all, how did you come about that? What were the, let's say, markers that made you want to investigate more on that topic?
For me, it started when I found this letter from 2010, I believe, and it was from the Dutch Parliament. And some members of Parliament were asking the Minister of Finance in the Netherlands why the Netherlands sold so much gold in the 90s, about, I don't know, more than 1,000 tons. And one of the answers of the Minister of Finance was to make their gold holdings more in line with other important gold holding nations. And I thought, whoa, there was a strategy behind selling the gold. And then I started digging into it, and I saw that in Europe, the big selling of the central banks in the 90s was mainly Europe, and it was mainly the small economies. The Netherlands, Belgium, Austria, Switzerland, they sold thousands and thousands of tons. Who didn't sell any gold in Europe? Germany, France, Italy. They were still holding the same amount. Um, so I started questioning. On one end, I started thinking about this. Okay, so I started digging and digging, and I found more evidence. And so the selling in the 1990s was predominantly done by small European economies. What happened after 2008 is that not only did the selling stop, but what also happened was that a few European countries were repatriating their gold. So that emphasizes how important the gold is for them. Some countries were refining their gold, like France and Germany, that we know of, and Sweden, by the way. So that tells me that those countries were making sure that all the gold they were holding was liquid. And the repatriation, of course, is also to make sure that some of it is safe on their own soil, and some of it is liquid, for example, in London or Switzerland. And another thing they did is they started communicating differently about gold drastically. So, for example, the Dutch central bank started saying on their website that gold is the ultimate store of value. And if the whole fiat-based monetary system would collapse, then countries could use gold to build a new monetary system. Now, when you read stuff like that, they're not against gold. And at the time, when I started my career in 2013 and 14 in the gold market, everybody was thinking that all central banks are against gold. And I was always like, well, maybe, they all own gold, so they can't be against it that much, right? Um, but because of my research, what I just described, I started thinking in a very different way about the European, let's say, gold policy by the central banks. So what I found was that there was an equalization happening, and the quote I just referred to of the Minister of Finance in the Netherlands, I also found in Switzerland on the website of the Swiss Central Bank. I found it in Austria. I found it in other countries, Belgium, I believe. And there clearly was, I had evidence, an equalization strategy among central bankers in Europe. It was very difficult to wrap my head around it, because what I don't know, of course, is what's if there is a written document in which this is all described, and the plans of what every country is going to do, etc. And in my mind, I don't think there is. I just think that there is this vocal agreement between countries that, we know where we came from, we know what's going to happen eventually with paper money, and so we should be prepared for the future, which is a return to gold in whatever form. You can call it the classic gold standard, or the gold exchange standard, or a gold targeting system, which is what I find a very interesting setup. But that is what I found that the Europeans were doing. And then I also started researching the 1970s and how Bretton Woods ended. And I started digging through historical archives, and I started digging through archives. And what I found was that the Europeans were, and this was a bit common knowledge, but they were not at all happy with the US closing the gold window in 1971. And actually, after that period, there were a few European countries and central banks that wanted to set up a new gold block. And that didn't go through at the time, because the US was blackmailing some European countries, mainly Germany, because Germany was, one half was occupied by the Russians, and there were a lot of US troops on German soil. And the US just said, look, if you don't exchange your surpluses in dollars, or you just keep them in dollars and you put them in treasuries, we're going to withdraw our troops from your country. So that happened for several decades, that Germany just couldn't, go live with a new monetary system. But what they could do is, for example, set up a counterpart like the euro. That was one of the reasons the euro was set up, to not only be reliable on the dollar, but have an alternative in payments, and then slowly keep thinking about gold and equalize it. And then these people didn't have a crystal ball, but for sure they knew they should hold on to their gold. Yeah.
Sorry to interrupt this episode, but I'd like to tell you more about what we do at Gold Republic. At Gold Republic, we provide physical gold, silver, and platinum, fully insured, fully in your name, fully allocated, in top-tier vaults, securely saved in Amsterdam, Zurich, and Frankfurt. No paper promises, just real ownership, full transparency on your name. We are fully regulated and conduct regular independent audits of our vaults, with more than 700 million euros of precious metals under custody and 70,000 investors that trust us in the last 15 years. Our top-rated app gives you full control. Track live prices, explore detailed charts, and buy or sell in just a few taps. Whether you're hedging against inflation, currency risks, or financial stability, at Gold Republic, we offer real assets to safeguard your generational wealth. Also, there's the central bank gold agreement that was signed, I think, in 1999. that was coordinating the cap on how much central banks in Europe would be able to sell, and I think it was 400 ton per year. But that obviously got quickly abandoned in I think 2017 or 19. I don't remember anymore. And now the opposite is happening. In the way that Poland, which also has a very aggressive targets in terms of gold reserves, is in a buying spree. We have the Czech Republic as well, Hungary. How do you explain that those countries that are maybe more in the eastern bloc of the European bloc are buying so much gold all of a sudden?
It's fascinating that, first of all, the central bank gold agreements in Europe was at the time described as a coordinated program for sales of gold. But in reality, it was a coordinated program to equalize the gold reserves. And second of all, so you have what you should know about Europe is that you have the EU, which consists of a lot more countries than the Eurozone. I don't know the exact numbers at the time of speaking. But this equalization process I just described between, the Western economies, such as the Netherlands and Belgium and Germany and France and Italy, that happened a bit, some decades ago. But now we also have those countries that are in the EU, but not in the Eurozone. And according to the EU documents, every country that is in the EU will eventually adopt the euro as their currency. Only Denmark is excluded from that rule. At a certain moment, the countries outside the Eurozone but inside the EU are starting to buy gold to equalize their gold reserves to the Eurozone average. And the other fascinating thing is that before those countries we just talked about, Poland, Czech Republic, and Hungary, were buying gold, they equalized their international reserves to GDP to the Eurozone average. So it's not only that it starts with the buying of gold and equalizing the gold reserves, but it thought about their entire international reserves, equalizing that to the Eurozone average. And you can track it through time if you plot those numbers in a chart.
I also wanted to know in terms of what you meant with what you wrote about the Operation Vide Gousset, where France secretly repatriated gold back then before the Nixon shock. Do you see then also parallels today where nations repatriate gold also from New York and London? Is then the trust and foreign custody actually eroding in the West? And paradoxically, is it rising in the East, where we see, for example, the first foreign gold reserves being held in the Bank of China?
Well, definitely. We just talked about the Netherlands and also Austria and Germany repatriating their gold. So that is similar to what France did in the 1960s. There's a little bit less political struggle this time because it's about less gold, and it's not about the repatriation of gold from France in the 1960s. Was also about about ultimate power. And this time around, it's at least for Europe, it's more or less like, okay, we're just gonna make a different balance and keep less, for example, in New York and less in London, and we want to have more on our own soil because then we can be truly for sure that we have zero counterparty risk. And in the East, it's just a rising of the East. Yeah, that's, the economies of the East have been growing economically. The economies of the East have been growing a lot. That's also a product of US dollar having the reserve currency, because if they run a trade deficit for decades on end, that means that some countries in the East must have a trade surplus and they gain wealth. So that's it's a bit of a yin and yang effect of the global economy.
What I find interesting about this equalization theory is that, and you haven't said it word for word, but I wonder if it's maybe an outcome that the European Union is preparing as a failsafe. If this monetary union and the euro in particular is, let's say, collapsing and dissolved, then those gold reserves that have been homogenized or equalized all across those countries would serve as a blank sheet to actually then reset the economies with their own currency. Is that correct?
That could happen. Yes. You could just use the gold, create your own currency again, a national currency, and go off from there. I don't expect that to happen, but that is true. Yeah.
And since we're also talking about the revaluation scenario or the gold revaluation accounts, this is kind of like the last option, kind of like the nuclear button type of moment in financial terms. We've seen a paper in August published by people within the Fed about revaluing the gold reserves of the United States and mark them to market. So to give them actually the real value market price that differs from the 43 ounces, I think $4 per ounce. I think that they've marked to 42. How do you think that this is now in terms of a timing actually quite telling about their intentions or at least possible scenarios in their case?
I think it's a natural outcome of economies. Look, what I always think is that the liquidity needs of mankind are much greater than the supply of gold, above ground supply of gold can grow, right? A lot of people say that's why gold standards fill. I say that's why the gold price always rises, because the gold price is typically denominated in national currency, and national currencies are created, much faster than nations their gold reserves. So you see the gold price always rising throughout the centuries. And what you get, for example, if you hold gold as a reserve asset and it rises in price a lot, you get a gold revaluation account. In Europe, they already have that gold revaluation account. So that's also an interesting signal. So on their balance sheet, it says gold revaluation account, a lot of billions, and they can just use that as equity or, and for example, take losses or write off bad debt from the asset side. So government bonds. But in the US, this is from because the US was so stubborn in the 1970s and they wanted to have the dollar being the world reserve currency. So they couldn't even, bring it across their lips to say, yeah, gold's real value is $300 or $400 or $800. No, it's $42. So they kept it on their books for $42, which is ridiculous, of course. What they could do, of course, very easy on a Wednesday afternoon is value it to market, and they would have a gold revaluation account as well and use it as they see fit.
So a lot of people are also looking into ways of making gold future-proof and combining modern technologies like blockchain technology with the trust and the properties that gold has carried for the last 5,000 years. What's your views on tokenization of gold?
I think the tokenization of gold is going to be the future. I think every asset will be tokenized and everything will run on blockchains, and all blockchains will be connected. That's just the next step and the evolution of technology, I think. I mean, gold is great because it's totally separated from the financial system, and it's also not man-made. Bitcoin, I like it, but it's still man-made, and everything that's man-made can be destroyed by mankind. So, gold has truly zero counterparty risk, but it's a bit clumsy, to ship it back and forth between countries or, whatever the disadvantages of gold are. So I think tokenization is a very important element in making that the gold market more efficient. So I think, not only all other assets, but gold will be tokenized as well. It's going to be a benefit for the gold market, and just as an add-on, you can still repatriate or withdraw your gold from vaults. You can keep it at home if you want, keep it in a vault in Switzerland or Singapore or America or wherever you want. But for the trading part, it will be a lot more efficient if it's tokenized and also standardized, right? So in the gold market now, it's a bit clumsy that in the East they have the standard of 1 kg bars, and in the West they have a standard of 400 ounce bars. And even those 400 ounce bars are not all 400 ounces, but one is a bit more and one is a bit less. So all that can be, can be improved by tokenization, I think.
And what exactly would it then look like? Would it be like fully allocated, or would you just then say like PAX gold or Tether gold that you have basically 1 gram of gold tied to a pool that is then tokenized? How much in detail do you think it's important to go in order to have something that is future proof in that sense? And what kind of blockchain would you think are appropriate for that?
Well, what kind of blockchain? I don't think there are so many like Ethereum kind of blockchains that that it doesn't really matter. I think in the end, ISCO standards will make all blockchains interoperable. So one may be on the Hedera blockchain, the other may choose Ethereum. Maybe there will be a lot of, let's say, permissioned blockchains as well, created by, let's say, the LBMA or the SGE or whatever. Those are less transparent, but those will also communicate with Ethereum and Hedera and Solana and what have you. Just like those blockchains of the mBridge project we just talked about. Those are that project is based on blockchains for CBDCs. Now that can be wholesale CBDCs or wholesale and retail. I hope it's only going to be wholesale, but those are also blockchains. So all currencies and assets will be put on blockchains, and they will all be interoperable through technology and ISCO standards. About your first question, I think I'm not really sure how that will look like, but I don't think it's very important because how the tokenization looks like from blockchain to blockchain and from product to product is just for the settlement system. It's just for the rails, for the payment rails. And after the payment has been done, everybody can withdraw its gold from the vault where it is stored. And you just have to trust the token for this payment transaction. You just have to trust the token to make the transaction, and the rest is not so important, I think, because I don't think that people will, like for example, central bank or you and I will save their gold in, for example, Tether gold or PAX or whatever. They will, if they have the gold, it's fine. But if you want the real gold, you just keep it in a safe or in your backyard or in your safe. Or you just keep it in a safe abroad or in your backyard or somebody somewhere behind a painting.
All right, great. Well, thanks, Jan, for this conversation. For the listeners and viewers, you can find Jan on X, super active there, and I highly recommend you following Jan because he always has great insights and commentary about the precious metals markets. And you also have your a newsletter on Substack, but you've been a bit less posting on that. Most of your publications can be found on Money Metals, if I'm not mistaken.
Yeah, I write for Money Metals for several years now, and that's where I publish my new articles. I haven't written a lot in recent months, but I'll be back.
Great. Thanks a lot, Jan. I appreciate the conversation.
Thank you.